You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody, that music means it is time once again for the Crypto Rundown, the program here on the old Options Insider Radio Network. We break down all of the just amazing activity going on out there on the other side of the fence, the crypto side of the fence. Going to talk the vol, the volume, the OI, the SKEW, all the good activity going on in Bitcoin and ETH, just about everything else lighting it up out there in the world of crypto these days. My name, of course, Mark Longo from the aforementioned network, as well as from theoptionsinsider.com. Reminding you, if you like what you hear, I know we have a lot of new listeners to the world of options who come through this program in particular. Make sure, A, you subscribe to the full network. You're missing out on a whole lot of other content if you're just listening to this show. And B, keep those reviews coming so new folks can continue to discover this program and indeed the network in these ever-troubled times known as 2020. And of course, speaking of hearing from people, we'd love to hear from you guys with your questions and comments. Let's see who we're hearing from today. It is time to roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show we welcome on guests from throughout the world of crypto and proceed to pick their brains for the benefit of you, the listener. Next up, we have a newcomer to the program and indeed to the network. He is Eric KOVALAK, the managing partner at VELLUM Capital. Eric, welcome to the Crypto Rundown program.
Hey, Mark. Thanks for having me.
And Eric, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the crypto and indeed options and derivative space, as well as what the heck it is you guys do over there at VELLUM Capital.
Yeah, sure. Thank you. So my background is I actually started as an options trader, and I traded various portfolio books for about 10 years, ran a couple of hedge funds, some names that listeners might have familiar to them. And about 2016, we started taking a look at the cryptocurrency space. And I said, here is something that is a really good use case for a investment fund. I think it's pretty commonly agreed that across the investment landscape, you take a look at a lot of funds and you're not totally sure what their point and purpose is for investors, rather than investors just doing it themselves. And in 2016-17, we looked at the crypto market and said, this thing is so complicated. It's so difficult for baby boomers to really understand what it is. I had an investor once who said to me, he says, okay, we're going to buy some crypto and where are we going to keep it? And I said, well, on a blockchain. He goes, well, can I see it? Can I hold it? I want to know what it looks like. I said, well, this is a problem. And so I realized that there's a whole community of investors out there who should participate in what I think is the most interesting technology wave that'll happen in our lifetime, but they don't know how, and they don't know how safely, and it's a very complex process. So we started our fund to provide a means for investors to approach the crypto market, and we wanted to apply a strategy to it that would provide them access to the market with a long-term bullish bent to help them really capture the appreciation that we've now just recently started to see after a couple of years in the crypto winter. And so that's what we did. We were early to the hedge fund market in the cryptocurrency space. It was an interesting process launching this fund because, a lot of the attorneys and the vendors and bankers didn't really know what to do with it back then, let alone know how to regulate it. But here we are. We're just coming up close to our third year. We've had a good time with it, and I think now it's a bit of a good way to end the year because investors can see that what we've been promising them for a long time is now starting to come about.
Yeah, that crypto winter, it seems like such a distant memory now. That was back when we kind of launched the show in the teeth of that, and Bitcoin was threatening 3,000 to the dark side, and everyone was saying, oh, this thing is done. Why even talk about it? And here we are. Fast forward a few years, and how the worm has turned. We'll get to all of that in a little bit. Spoiler alert, listeners, there's a whole bunch popping off in the world of Bitcoin and indeed crypto. Just in the past week, it's been, I think the technical term is insane. But let's get into a little bit before we get to that, Eric, what you guys actually trade over there at VELLUM. You say you come from the world of options, so that's obviously your wheelhouse. Are you guys trading the Bitcoin options? You trading the futures, the spot? What are you guys trading? What are the vehicles of choice over there at VELLUM?
Sure. We're trading the underlying currencies. At the time of launching the fund, the derivatives markets were not developed the way they are now. And so they weren't available to us. And given the amount of volatility in the price movement in the underlying, we think that we could express a bullish opinion pretty well using underlying assets. Yes, I'm a derivatives trader, an options trader. I make most of my practice trading the dynamic volatility curves on the equities markets. But in the cryptocurrency space, we use the underlying.
So what's it like going from the world of options where you're looking at SKEW, you're looking at volatility in the Greeks and all that fun stuff, going out to the Delta One world again there, Eric, and just trading spot Bitcoin and everything else?
Yeah, you have to have an opinion, which you do in options as well. But in the Bitcoin space, there are some nuances. You get the flash crashes. You get it's almost like going back to the old Forex world where you had a whole series of bucket shops that would ping off each other as they tried to offset their orders. So you take something like what we just saw over Thanksgiving, these hard downside selling crashes. You have to learn how to kind of dance around those a little bit because clearly that's not an expression of market intent or the narrative of what's happening here. And now 24 hours later, we've seen that's to be the case.
Yeah, it had to be a challenging couple of weeks for you guys out there. As you mentioned, you're not using the options to hedge, which probably would have been your go-to in the previous world. It's a little bit easier to trade in and around the underlying when you have the options kind of backstopping, but now you're just kind of straight getting long and short out there. So how challenging has it been? And are you guys using, technical indicators, momentum? How are you guys determining when you're getting in and out, getting long and short Bitcoin and ETH and everything else?
Sure. Yeah. So most quantitative research has proven that it's not about selecting a best model. It's about using a good model and aligning it well with the nature of the environment that you're in. And so if our long-term outlook is that Bitcoin is going to have a much higher price someday, ETH is going to have a much higher price, the whole market caps are going to go up substantially, well, then you just need to select a model as appropriate for that space. And that's what I would encourage individual investors to do as well. There's a thing that became popular kind of, say, 2010 or so called cross-sectional momentum. And it's a matter of just picking out which assets are winning and dumping those that are losing. And if you take the S&P 500, most of the gains are in just a few equity names. Same thing for the NASDAQ. If we do that in cryptocurrencies, I think you have to apply some nuance to it because there's so much variety in the different assets that are out there. So there are assets that we will not trade for principled reasons about how they're developed or information we've researched about the development team, and we don't feel it's a good selection for our investors. But more or less, take a look at the top 4 or 5 market caps and understand that when one of these cryptocurrencies becomes the global currency or the global store of value, the intermediary of exchange, whatever thing keeps us up at night and we're excited about is the potential for one of these to be a multi-trillion-dollar asset class. One of those is going to have to go through the current barriers that they're at now for market cap. So Bitcoin's at 350, 360. It's going to have to go to a couple trillion. And our program is designed to be long momentum, catching the ones as they go up. So it's a combination of very simple long momentum strategies with a market cap rebalancing strategy. And if you combine those together, it's provided substantial alpha over holding the underlying assets for the last 3 years. It's protected our downside for investors. But more importantly, it does the one thing that you always want to do is if you're going to take the initial risk of being in the cryptocurrency markets, which it is substantially risky, you want to make sure you're going to stick around in the end and get it right. And you can't get it wrong as long as you're rolling into the largest market cap on the scene. Because one or two of these is going to become the Amazon of all retailers. One or two of these is going to become, the Tesla of all electric car manufacturers. And we just want to make sure we're participating in those. So far, it's done really well.
It has done really well. We can't bury the lead any longer. We have to roll on into it, Eric. It is time for the Bitcoin breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we break down what Eric was just talking about here, the insane moves we've had since our last show. Now, since we launched this program, it was a little bit after the heady days of late 2017, but everyone watched that march of Bitcoin up to almost 20,000 and said, okay, we have to get into this space. This is the hot thing. We launched this show a little over a year later, and it seemed like some of the enthusiasm was starting to ebb. Bitcoin had, of course, retreated from those lofty levels, and some people wondered if we would ever get there again, certainly in the depths, the nadir of the crypto winter, which is not that far away from when we launched this program. It seemed like maybe those days were a bit of a pipe dream, and that 20,000 level was behind us. Well, lo and behold, listeners, Bitcoin surpassed it again this week. It wasn't quite 20,000. If you recall, the high was close to it. It was about 19,864, which it surpassed today, actually, this morning. It's been a wild ride over the last last week since our last show, listeners. People have talked about the volatility of Bitcoin. We'll get to all that in a little bit, but just the net swings we've seen out there have been, I think, impressive, terrifying, pick your adjective, they all apply over the course of the past week. We broke above 19,000 last week, started threatening that level, that 19,800 level, that high of all time out there. And it seemed like once that started happening, once that started coming to fruition, the bears got their claws out and they took Bitcoin, they hammered it right back down, about 3,000 handles. So if you thought that big sell-off back in March was scary, we saw some big moves again. Thanksgiving got down to about 16,200 or so off about 3,000 points, and then quite the rebound again, breaking back through 17,000 again, and then coming into today where it's on the rampage yet again. In fact, if you don't like where the Bitcoin price is today, just wait 5 minutes. It's swinging all over the place. It's up about 7%. Just today, coming into showtime, it was at about a 19,234. It's up over 100 points from just then. It's about 19,362 as of a few minutes ago. So huge swings out there, Eric. I want to get your perspective. Obviously, you're out there managing money in these markets in these just unprecedented times. What are your thoughts on the fact that Bitcoin has finally gotten back to that level people said it would never get again, got back to that December high? B, the fact that it sold off so aggressively around Thanksgiving, 3,000 points in a clip. And then C, walk our listeners through what's it been like managing effectively a spot underlying fund through all of this turbulence, Eric.
Yeah, sure. Thanks. It's really fascinating. Wednesday morning before Thanksgiving break, I sent a letter to our investors and I said, okay, well, this has been really great, but I want everyone to expect a $2,000 to $4,000 pullback simply based on the narrative. And the narrative, the first time Bitcoin went up back in 2017 was the price was in front of popular consensus. The price went up really high, and that's what got everybody's attention. But now the price hadn't moved and popular consensus has started to build. And I think popular consensus is way ahead of the price right now, which means the price has to catch up. So even though we know that the market ramped up really hard and there's probably a whole bunch of stop orders sitting right below because nobody wants to relive what they just survived through the last 2.5 years, I think that the potential for higher prices much more quickly is substantial. Some of the outlying puts on the market at the $32,000, $50,000 level, I think those people have very rational propositions that the price could actually get there. So I told our investors this thing is probably going to pull back 2,000 to 4,000 points, and then I expected it to rebound hopefully by the end of the year. What I didn't know, what nobody could have known, is it would have pulled back the next day only to rebound on the very next trade session. So this is a substantially faster cycle than I think anybody would have anticipated. And what does that say? It says the narrative is really, really strong. And that's an important feature. And I think it gives us even more of a bullish lean on the market at this point.
You know, you're obviously out there managing crypto assets. We've had an ongoing discussion / debate on this program over the last couple of years about where the heck does crypto fall in that asset management category. Some folks have said it's negatively correlated. Some folks have said it's uncorrelated to the broad markets. I think you look over the past year, it certainly has been more closely perhaps than you might think. And times like last week, maybe playing into that a little bit. What are your thoughts on where Bitcoin falls in the overall asset allocation realm? And what is it to you? Is it an uncorrelated asset class? How do you guys quantify it over there?
You're kind of asking me to tip my secret sauce, but I will say
it's just you and me talking. There's nobody else out there listening.
I got you. We did a study about 2 years ago, and what we found is that Bitcoin, in certain instances, is front running the domestic equity markets here in the United States by 6 to 25 hours. That is a meaningless statistic, but it does say there is some motion. We really found Sunday nights, and crypto traders will know this. It's usually when most of the world is sleeping and unattentive that it makes its biggest moves. So I think the crypto market is a more complete market. There's sufficient liquidity now that people are going to it to offset risk. Well, that only works if cryptocurrency is really a risk on, risk off, high beta type of instrument to other instruments that exist out there, such as the equity markets. What's really fascinating about this bull run that we've seen the last 2 months is for the first time, crypto has departed major underlying asset classes like equities and particularly gold. The gold and crypto divergence is substantial. And now this is close to my heart because I've been arguing for several years that gold is not a sufficient vehicle as a store of wealth. It's impossible to treat gold as a currency. I know there are gold bugs that'll come across the wire right now for saying something like that, but gold is not a good long-term terminal solution for an intermediary of exchange for the global world. There's not enough of it. It's too physical, if you can imagine such a thing. But now we have an idea like Bitcoin that, or something else that could come along, 5 years from now, that'll use the same baseline idea and technology that would surpass Bitcoin, but some globally traded digital asset could actually provide what we've been asking gold to pretend to do for 50 years now. And I think watching those two diverge says that something's a little bit different this time. And I also, today, equity markets sold a little bit this morning. I think the Dow futures are down 400 at one point, and Bitcoin didn't even flinch. Now, we haven't seen that over the last 2 years. That's a different thing happening. So there's something different about the way Bitcoin's acting now than it was before.
Yeah, new players coming to the space. I know once it continues to rally, all the mind share starts floating in. People start paying attention. I'm curious for you guys. You're obviously out there managing institutional assets. What has the last year been like as we've seen Bitcoin start to rally? And certainly the last month or so when the rally has been, I think the technical term is off the chain, just the explosion. Have you seen a lot more interest from maybe traditionally staid, traditionally reluctant institutional investors? Are they hitting you guys up maybe where they weren't before and saying, we want to get back in this Bitcoin game? What's that been like over the last year and in particular over the last few months from an institutional investor perspective, Eric?
Yeah, it's been very good because I think a lot of institutional investors simply were not interested in the cryptocurrency space for the last three or 4 years. Principally because there's a lot of asymmetric risk, or there seemed to be. And also there's a lot of feedback loops inside the institutional asset allocation process that doesn't always lend for allocations to high risk strategies that are the opposite of Warren Buffett says. You ought to understand what you're investing in. Well, here's an investment that's super risky and nobody understands it. Great, sign me up. Nobody's going for that. But suddenly, I think the institutional crowd has slowly become more aware of how this thing works. I think time has been a good test for them to see that there are some stabilities. In fact, the beta ratios and the Sharpe ratios for Bitcoin are actually substantially good if you include the growth curve. So I think there's some reasons to be attracted to it. Now, if they're going to it as a hedge for other things, I don't think that is a entirely founded idea because there's no evidence that it really hedges against anything else. What I would consider going into the mind space that cryptocurrencies and blockchains are in fact a similar play as buying NASDAQ equities. You are buying a technology stack that has proposed solutions and the potential for great assimilation. So if you went to Facebook early on its IPO and said, hey, this company is going to have 3 or 4 billion customers. Should you buy some? Well, of course, I don't even care what they do. If you have that many customers, I'm going to buy some. Well, something very similar here is happening in Bitcoin. And so the institutions are finally starting to come on board. What's good about the institutions is they have such substantial capital, and their long-term view provides a great stable base for Bitcoin. So when an institution XYZ comes in and buys, a California retirement fund or something like that, buys 250 million or several $1 billion of Bitcoin, they're essentially taking that out of the supply chain for the asset and just warehousing it in expected appreciation. That must make the prices go up. Physically, it just must happen. So I think we're seeing new floors being put in. We don't know exactly where they are. I would guess they're north of 10,000, and that's exciting.
Certainly is exciting. Let's see what's exciting to folks out there in the Bitcoin options market. A lot of excitement out there, to put it mildly. We've been playing with a lot of different platforms out there. We use SKEW a lot on this program. We're starting to add, they've been on the show a number of times, the folks over there at Genesis Volatility, because they look at the crypto options and volatility market in a little bit different way, which I think is fascinating, and certainly I think will be interesting for a lot of our listeners. We look at overall vol, usually 30-day historical and then 30-day implied going forward. They look at it in a little bit smaller increments, in particular 1 hour, which is kind of fascinating, particularly over the past week when that vol has been swinging wildly hour to hour. So let's go look at it from the 1 hour perspective. And remember, on the last show, we were topping out at around a 60-odd%, I believe, on the vol front. Well, hourly vol, looking at the Bitcoin hour by hour, peaked at about 83% during the height of the big sell-off last week. Then, of course, we sold off a bit. And then coming into today's show, actually, we were trading higher as this big movement continues. Like I mentioned, Bitcoin's up about 7% so far just today. So we're seeing that vol coming into showtime is at about an 85.5%. That's on the hourly vol front. So Bitcoin vol swinging around wildly. They also look at SKEW a little bit differently. SKEW is traditionally your 25 delta put, your 25 delta call. The Genesis guys look at the entire strip from the 30 delta options down to the 20 delta options, and they kind of aggregate that, look at on both sides, the puts and the calls. So they call it their 1 hour 30-20 SKEW, which is kind of fascinating and a little bit different way to look at the SKEW out there. We saw huge swings in that, as you might imagine, given all the paper going up over the course of the past week. You got on the way aggressive on the positive side, up to about 18.3. On the 25th, dropped down to -10, -10. Of course, a lot of that having to do with expiration there on the 27th as well. Some of those options coming off the board. And then swinging back up today as the calls are just rampaging up to about a 22. So huge swings from a SKEW perspective. OI, similar action going on out there. Of course, DEREBIT, still the big dog leading the dance out there. OI, net across all the leading platforms, though. So you're talking DEREBIT, your BAKKT, your CMEs, your Huobi's, your LedgerX, OKX, all those fun platforms out there. If you add them all together, they got just around 5 billion on the heady, crazy times of last week. Of course, towards the end of the week, a lot of that weekly and indeed the monthly Nove paper rolled off the board. So we saw a bit of a hit back down to about 3.7 or so billion out there in terms of OI. Then it rallied again. So coming into today's show, we were close to 4 billion again, aggregated across the venue. So they're replacing a lot of that lost OI already out there from November. And again, the Genesis guys look at it a little bit interestingly. They break down the OI by just calls versus puts as well. How much is out there? And as you imagine, as we've been rallying again, calls always usually leading the dance in crypto, but now it's a little bit more aggressive. About 120,000 calls open versus a little bit shy of 80. It looks like about 75,000 or so puts out there. In terms of volume, again, out to DEREBIT, as you might imagine, the last week, pretty active out there. The 26th was the big day coming in. It had about 750 million, probably going to beat that today, though I haven't had a chance to pull up how much notional is going up on DEREBIT today, but probably a little bit more than that going to go up today. The 25th, you saw 576 million worth of notional. The 24th, 538 million. Pretty active. Again, that's not quite as high as some of the other recent days, except for the 26th. The big day we saw recently was on the 20th, 762 million. We saw 701 million worth of notional on the 18th. On the 17th, about 700 million as well. So we have seen a lot of active days, 751 million on the 5th out there. So it's been a lot. All of November has pretty much been just a tumultuous period for Bitcoin options out there on DEREBIT and most of the other leading platforms. And I don't think today is going to change that as well. By the way, if you like those hourly bits of analysis, the Genesis guys also break it down. Open interest by hour, which is kind of interesting. It peaked on DEREBIT on the 27th at 225,000 contracts open. Of course, we all know the 27th also an expiration time for the November contracts. A lot of those rolled off the board shortly thereafter and starting to work to make some of that back here coming into showtime. In terms of the big trades, again, today's a pretty active day. Let's break down what's going on today. Again, you can look at it a couple of different ways. The Bitcoin and the crypto world likes to look at things in notional premium. Not my favorite way to go, but that's how they like it. So if you break it down that way, a little bit over half of today's paper looks like closing in on 60% It's coming on people just buying call premium straight up, loving themselves a little bit of call premium. Looks like about a quarter of the paper or so is coming on the overriding call side. And then we got a little bit of put, looks like maybe an eighth roughly on the people buying puts, and then people selling puts, let's say 3/16. Let's go out this graph, not exactly precise here. I like to break it down by contract volume. That to me is a little bit more precise. If you break it down that way, people buying calls is less than half of the paper. It's about 0.4% out there. So almost half, but not quite out there. And they got, looks like about a quarter on the call overriding side. Contract wise, about a quarter on the put buying side as well. It looks like about a third on the put selling side. So you break it down by contract volume, a little bit different out there. Speaking of contract volume, let's break it down really quickly what people are trading out there. And people, pretty much the big trade we saw today was it's like a 600 lot of the decent 14,000 puts expiring on the 11th, going up for 0.055 Bitcoin. That was back when Bitcoin had just crossed the 19,500 threshold. So pretty aggressive hedge. Again, not surprising given the swings out there. Maybe someone might want to put a little bit of capital back to work to protect some of that downside. If you're wondering, by the way, it's 132% implied volatility. Before we got out to the months and everything else out there, Eric, like I mentioned, you're not really trading the crypto options, but this is kind of in your background. What are your thoughts out there on these vol levels we're seeing out there, the skew and just the dramatic swings we've seen in all of it in the Bitcoin land over the past week, sir?
Yeah, sure. It's a very different environment than trading regular exchange-based options. You know, in the old equity market, we knew what exchange we were sending it to, and we kind of knew who the counterparties were and who we were offsetting trades with. And it was a lot easier to get a sense of where the inflection points were in the market makers' books. I mean, derivatives markets today, electronic markets are extremely deep, but you could still tell when the market makers were getting pressed on their volatility. In the cryptocurrency space, this is very different. You don't have the same dynamic vol curves. Dynamic, I mean that when the market crashes, vol automatically goes up. And when the market goes up, vol starts to compress. That's not necessarily the case here. Also, we don't know who our trading counterparties are. Now, I'm in favor of this because it makes for a much fairer and a much larger market space, but it also means you have fewer touch points with the market to try to make a second level decision process. So I think when I see prices continuing to move and volatility no longer expanding at the same rate, then that kind of tells me that that trend is in place and it's probably going to continue.
Certainly fascinating stuff to parse. Let's look at a few more options metrics here before we roll on out of the big dog here. But yeah, interesting stuff. We talk a lot what strikes have been capturing the imagination and what months are pretty active out there right now. Obviously, like I mentioned, no rolling off the board. So DECE is a big dog. DECE, of course, a quarterly crypto options and derivatives. They just love quarterlies for whatever reason. And the traditional December expiring right around the end of the month is the big dog out there right now. A little bit more than 60,000 contracts open, followed actually by Jan, which is interesting. Not the quarterly out to March, but Jan with about a little over 40,000 contracts. We've got also almost a little over 30,000 contracts also expiring in the first week of December as well. So there's a lot of paper spread throughout December, not just at the end of the month. And then we've got March there with looks like about 25,000 contracts. And even some June starting to pile up with about 15,000 contracts. So the quarterly is still getting the love, but a lot of weeklies trading in DECE out there as well. If you're wondering about Strike, we talked about it before. Those ridiculous 36,000s are still open. They're still the number one strike with just a tick under 20,000 contracts open out there, which is, I think, crazy town by just about any definition. We talked about that before. I won't belabor that again here on the show. In terms of the more realistic strikes, looks like it's about 16,000. That's in the number 2 spot with a little bit north of 14,000 contracts open, followed by about the 20,000 strike, which seemed pretty outlandish, pretty aggressive a couple of weeks ago. Now, not that far away with about, looks like a little bit shy of 14,000, about 13,800 open there. So that's how things are shaping up. Let's look at the Bitcoin options front over there on CME before we roll out. It's been a decently active, not a ton of paper lighting it up out there in terms of the options. We saw 86 going up on Monday, about 200 on Tuesday, and about a couple of hundred today. Remember, those are 5X coins or 5X contracts out there. So multiply that to get around 1,000 contracts on both of those days. But still, not a ton of options paper. The futures have kind of been where the action has been on CME. In fact, a little bit of a game of telephone going on out there. The folks at Cointelegraph quoting the folks at Arcane Research, who were in turn quoting numbers from our friends over there at SKEW Land, saying that CME has now surpassed OKEX in terms of net notional futures OI. OKEX had about 1.07 billion and CME had about 1.16 billion. Now, you know what I think about OI and notional. That stuff doesn't really excite me, but hey, the crypto space, that's kind of the way they play. So that's been interesting. The folks at Arcane Research, who I'm not familiar with, they pointed out that they think that's a nugget going back to what we talked about earlier, that the institutional players are here to stay now in the Bitcoin space. And certainly the volume at CME would back that up. It's been a very active week on the Bitcoin futures front. 16,000 going up last Monday, 19,500 on Tuesday, 17,000 on Wednesday. Obviously, Thursday was a holiday here in the U.S., so no volume there. And 26,000 going up on Friday, close to that number already on the tape today. So pretty active stuff. Eric, I mentioned earlier, you guys mostly trade the spots. What are your thoughts on the futures? Have you guys looked at the futures of CME? I know one of your issues in the past has been kind of the regulation side and how getting some of these lesser known venues to pass muster on the regulatory side, a little bit challenging. CME, obviously a listed lit venue people have heard of, not going away tomorrow. Have you guys thought about playing around, or have you even experimented playing around with the CME futures, Eric?
Yeah, in our fund, it's not in our mandate, so we'd have to come under NFA regulations, and it's generally my first preference not to do that. But I think it's a good product. I think it's something that people ought to take a look at. Alternatively, now that the option space is getting some good volume in it, if people are going to the futures space for leverage, I would really consider, going into a 70 delta call and trying to capture the upside that way. I think the future space is fine, but I'm more excited about the underlying myself.
Yeah, that certainly makes sense. And I'm curious, do you agree with the supposition here from the folks at Arcane Research? I think the resurgence in notional volume and OI over there in CME means the institutional players are finally here, Eric?
No, actually, that's interesting. To me, the institutional players I've had discussions with, they are curious about how do I own directly Bitcoin. So we're fielding questions about cold storage, about how to lock up the assets for safety, our internal security processes. So that's a much higher degree of interest to them. I don't think that immediate liquidity or necessarily getting on an exchange represents a significant added value to them.
Interesting. So we've been hearing for a while that, getting a registered, listed, known venue has been one of the hurdles that people needed in the crypto space. The other one we saw for a while is people thought, hey, obviously would want some sort of physically settled contract. Yet the numbers out of BAKKT would maybe not back that up. BAKKT putting up 756 contracts on their physically delivered, physically settled. So 1-to-1 Bitcoin futures over there. That's a far cry from their all-time high of nearly 19,000 set back in September. So they've kind of been trending in the wrong direction as the crypto market has resurged, and certainly as CME volume on just about every other platform has exploded. So maybe that's also a sign that folks are not that excited about some sort of physically settled contract. Is that your takeaway as well, Eric? I know when these products launched, everyone said, okay, this is it. This is going to get the institutional players in. They want some sort of physically settled contract. And it seems like from the volume here, Eric, not so much. Does that surprise you, or is that kind of what you thought?
No, that makes a lot of sense. In fact, we actually made a process possible for our fund about a year ago where people could contribute to the fund and participate in investing with us in-kind contributions, meaning they would actually allocate their Bitcoin to our banking facility. We would incorporate that into the investing pool. So people are actually coming to us with digital assets. And then I've had some discussions with investors that when it comes time to get their funding back, they would like to get back in crypto. And I think part of this might be the pool that I'm in, because we recently launched an offshore vehicle out of BVI for foreign investors who want to invest with a American-based manager, but who has global access and availability. But what's happened, and this is interesting that's happening now on the backside of COVID, where people have suddenly had to wake up to a global contagion, a global concept of us all being together in the same family across planet Earth in a more real, personal, and tangible way. You have investors saying, well, what if I'm not here right now? What if I'm in a different part of the country or a different part of the world? How is that going to look? And does that match my thesis for the future state of the world? And so when they're investing with us, they want to invest in a way that matches the future. And unfortunately, as much as, I love the SIBO and series and all the good times that were had down there, I think that centralized exchanges are actually the opposite of what cryptocurrency and crypto digital assets are all about. And so people who are investing for the philosophical alignment, I think they want to see a tactical alignment with that philosophy as well.
You're right. That has been one of the interesting debates, conflicts out there in the crypto space, is as more institutional players discover them, as more of the traditional marketplaces start discovering them and listing crypto products, it very much conflicts with the core ethos of crypto, which is to be decentralized, unregulated, and all the other things that go along with that. So it has been fascinating to watch the back and forth, the push and pull between these two. Because on the other hand, the institutional players, they want to come, and they want to come from the traditional asset markets and bring a lot of capital with them. They demand and expect certain things like regulation and easy access to capital and everything else, and tight liquid markets. And in order to get those, you need to provide some of those things, which are contrary to crypto. So watching this back and forth, this push and pull, this clash, and sometimes the coming together of the traditional financial world versus the crypto world has been one of the fun and interesting journeys we've been able to go on over the course of this program. And now that journey continues, listeners, into our next segment, and it's time to explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, a portion of the show where we explore everything outside of the number one big dog, except for here when we break down the top 10. Remember, take these overall market caps with a huge grain of salt. But the rankings, I think, have some merit. Number 10 out there in the top 10, Binance Coin coming in at about $4.5 billion. Number 9, Polkadot, $4.7 billion. Number 8, Cardano, about $5.2 billion. Number 7, Chainlink, $5.5 billion. Number 6, Litecoin, $5.6 billion. So pretty tight grouping down there in the bottom half of the top 5, or top 10, I should say. Bitcoin Cash, number 5 there, $5.8 billion. Number 4, Tether, formerly number 3, now number 4 at about $19 billion. Our old friend XRP just shooting north, coming in at almost 64 cents here, so almost doubling over the course of the past couple of weeks out there at about $29 billion, pretty much even, so reclaiming its number 3 spot with an exclamation point here over the past couple of weeks. Number 2, of course, ETH, $68.5 billion. And number 1, the big dog, Bitcoin, $356 billion out there. Eric mentioned the 1 trillion level, not quite there yet, but given this recent rally, that doesn't seem that outlandish anymore. Let's go on out to the number 2 overall crypto options market. Let's talk ETH. ETH's had a good run here, as you might imagine, this past week as well. About not quite 10 handles, 9 handles and change, but it's been moving all over the place as well. Let's go back again out to the Genesis folks. They look at the 1 hour volatility, and that's been kind of fun to watch in ETH as well. It peaked a little bit earlier last week. It didn't peak on the 26th like it did in Bitcoin getting into the 27th. It actually peaked on the 23rd at about 107%. So that's a lot of juice going on out there. And then dropped quite a bit after expiration. Obviously, there's a lot of contracts coming off the board. Got down to about 75% on the 28th. And then as today, coming into showtime, we saw that vol rallying again. It was at about, not quite 100, at about 95.5 coming into the start of the show. So ETH vol is on the rampage yet again. Calls outnumbering puts in terms of the OI ever so slightly. Looks like close to 70,000, or should be 700,000. A lot more contracts out there in ETH land. So 700,000 contracts on the call side and right around 600,000 on the put side. So a little bit closer on the ETH front than it is in Bitcoin, where calls still leading the dance out there. In terms of hourly action. OI, as you might imagine, that peaked at a similar time to what we saw in Bitcoin. That peaked at about almost 1.5 million, about 1.4 million and change on November 27th. It dropped quite a bit after expiration down to a little bit north of a million. And then now coming into today's show, we've seen a lot of that come back, almost about 1.25 million back worth of OI on the tape out there. So interesting stuff. Eric, before we keep going, some of the other altcoin, I know you guys like to focus on Bitcoin over there on your fund, but any other altcoin and any other crypto really making it onto your radar over there at VELLUM these days, Eric?
Yeah, sure. We're looking at some of the things further down the list, with a bit of interest because their technology stack seems to have discerned itself is substantially different. Things like Monero, some of these ones that have different privacy protocols, different technology stacks. I think some of these are going to perform well if we get different geopolitical dislocations over the next year or two. I think that could be interesting. But primarily, there's a couple of ways of looking at it. One is just purely on the consensus narrative. The other way of looking at it is on the technology stack. Who has a superior solution to the problems we're trying to solve? Well, I'm much more sensitive to the consensus solution there, because to understand what problems we're trying to solve, first has to understand consensus. So I know there's a number of developers in the technology space that are excited about their incremental evolutionary change, and that's supposed to make one of these coins better than the other. What we're looking for at our fund is something that has revolutionary change, which is a leap ahead, and try to enter that asset into our pool.
Let's look at the rest of the pool of the altcoin out here. I can mention ETH doing pretty decent numbers out there across the board. Let's look really quickly at some of the other cryptocurrencies you guys like to trade. Certainly in the top 5, like I said, Ripple, our old friend Ripple, up over a dime, 11 cents since our last show out there. So it's been moving quite a bit. Certainly a long way, a far cry from the days when it was back in the teens and people thought maybe XRP was going the way of the dodo. Of course, that rising tide lifts all boats, Bitcoin carrying everything else along with it. And that's been the case out there. Bitcoin Cash actually net on the week is kind of unched, which is kind of interesting. It's maybe one of the few that hasn't been carried, as well as Bitcoin SV. That's actually down about 12 handles from our last show. So those two kind of bucking the trend, but still interesting stuff, as most of the top tier in the altcoin universe are catching that Bitcoin wave and riding it to ever new heights. Speaking of riding it, let's see what you guys have in terms of your questions. It is time for your crypto question segment.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to Crypto Questions, where you guys take the reins, your questions, your comments, your insights. Let's start off here with frequent questioner Scott Somer. He likes watching the show on YouTube. You guys can do that as well. It's more of a listen watch. You get a static image and you get the show as usual. But if you like YouTube for a lot of your listening, I know a lot of you do. It really is predominantly a listening platform, even though it is a visual medium out there. Most of their quote-unquote views are really listens. That's what all the data tells us. So yeah, if you like listening to our show on YouTube, you can join Scott and everybody else over there. Find us over there, Options Insider, on the old tubes. He wants to know, can you guys do YouTube live, or does your primary podcast contract not allow that? No, Scott, we can do whatever we want. We have no primary podcast contract that restricts us from any sort of venue. We use the venues we like because those are the ones where podcasts really grew up, and we still are primarily and predominantly a podcast-centric and podcast-forward platform. We did create the first Options podcast way back in the dark days of, well, we built it in 2006 and launched it officially in 2007, even though some might have snuck out even earlier than that. So, yeah, we've been doing this for a while, but as other platforms come on board and we see an easy and a useful use case for us and for the audience, and certainly maybe some video could slip in there in the future. We've been hitting at some interesting tweaks to come in the near future. So stay tuned for that, Scott. But for now, yeah, we have nothing prevents us from going live other than just the logistics and the challenge. You see how hard it is sometimes with some of our guests and contributors just to be able to contribute via phone, via Skype. Some of them can't even make that work. So if I was going to add the layer of a video component to them, it might blow their minds. So we'll see. But never say never. But for now, at least, we're happy with the platforms, and you can get it on YouTube, just like you did, Scott. So hopefully you guys are enjoying that. Seems like a lot of you are. Next up, Manisis. Let's go with Manisis. That sounds better. Manisis wants to know, are you guys spooked by China gobbling up so much Bitcoin recently? What does that mean for the markets. Yeah, Eric, this is kind of an interesting development. I'm sure this has been on your radar over there at Vellum as well, as you guys are clearly, watching the ebb and flow in the markets. China seizing a little over 4 billion, about 4.25 billion in cryptocurrencies. Not the first time we've seen this kind of state seizure of assets like this, but certainly one of the more sizable. I'm curious for you guys, Eric, did this spook you? Does this guys make you concerned about the future of these products? As Manisa says,
sure, it certainly has been on our view. One of the things that's in contention and has made Bitcoin kind of the political whipping boy of financial innovation for the last half decade is the regulators haven't really determined how they're going to regulate this product. Take, for example, just as a possibility, you're in court and the judge says that you must pay the plaintiff X number of dollars, and your means of paying the asset is in Bitcoin. Well, if you say no, how is the court going to enforce that order? So far, regulators, especially here in the U.S., have had various means of getting the technology enablement to capture the Bitcoin, the passcodes, the laptops that have the secret sauce, whatever it is. Or sometimes through negotiations for prosecution, they've been able to get access to these Bitcoin wallets. There was one recently here in the States worth $1 billion. We did follow this one in China. It's interesting. I don't know exactly how they seized the digital assets, but I also read a report recently that they immediately sold it into the market. So this thing may have already come and gone in market pricing before we ever saw it. Does it mean that it's going to be the last one? I suspect not. I think that regulators are quickly coming up to speed on how to engage cryptocurrencies. Is there a possibility that you would have a state that would become extremely negative to cryptocurrency? Well, we've already seen that for the last decade, including China in particular. So I don't think it's a surprise. I think that it will probably slow down price appreciation, but at the end of the day, one of the points of having a public consensus and a distributed ledger is that it's distributed beyond the centralized authority. There's a lot of moral questions about this, and how do we act as a society if assets can be completely fluid and moved around the earth without any encumbrance or traditional political input. And we still have to solve those problems. So we watch all these cases uniquely and individually. Our team at Vellum particularly looks for instances of breakdowns in the core technology stacks in Bitcoin and the other digital assets. And so far, that does not seem to be the case.
Yeah, I agree with you, Eric. I think, as what was the listener's name? Monesis. Yeah, this is not a new development. We have seen this before. Again, this is a little bit larger scale in terms of how many assets they were grabbing there. But we've seen other governments try this in the past. Again, as Eric pointed out, this is kind of the nature of the decentralized open crypto thesis, is that money can move, assets can move. So no one government, even China, can really shut down the whole thing. But you're right, it is a bit of a wake-up call for folks who thought, this might be smooth sailing onto $1 trillion in market cap or whatever it is. There will be some roadblocks, some stumbling points along the way, but it seems like this doesn't seem to be spooking the markets right now. They certainly have put this in the rearview mirror. But something interesting to watch. I don't think this is the last time we're going to see this, and maybe not to this size, as markets and indeed as governments come to grips with what this means for them, for their monetary policy and everything else going forward. A lot of things could be upended by that. Speaking of that latter and upending monetary policy, we have a question here from LLC 188. He says, does the Libra coin really have a shot of coming to fruition? Well, you have good timing here, Mr. and Mrs. LLC, because this was kind of a hot talking point a while ago on the show. It kind of went away when it seems like there were a lot of impediments to this Libra coin really coming to fruition. Congress wasn't exactly keen on it. A lot of the central regulators and governments weren't exactly keen on the notion of Facebook playing in their realm potentially of monetary policy. Well, the folks over there at FT are reporting, according to unnamed sources, which is always interesting, but reporting that they think this Libra currency is going to come to fruition and come pretty soon. They actually think it's going to roll out in January, but in a somewhat diminished format. Initially, the plan was going to be this multi-currency project. Instead, now it's just going to be the one coin based solely on the US dollar. So a little bit of a scaling back of the project, probably as a result of all that negative feedback they got early on. But if that launches and if it gets some sort of impetus behind. A lot of people, I think, also are just concerned by the notion of Facebook dipping their hands into the crypto space. Those two, like we mentioned, the clash between centralized traditional markets and the open ethos of crypto. Facebook, the ethos there of getting their hands on all your data, and crypto not exactly synonymous and simpatico there either. So it's going to be interesting to watch how all that unfolds. But so far, it looks like here, LLC 188, that Libra may actually come to fruition, and perhaps sooner than you think. Eric, you have any thoughts here for our listener? And have you been watching this kind of back and forth about Libra, and what do you think, if any, impact it's going to have on the market, sir?
Yeah, we've been watching it, but the real response is what's the point? You know, first you had this curious concept of having a coalition of different companies supporting something, and now you've reduced the coalition and you've reduced what it's pegged to a single fiat currency. Well, why don't I just trade in the fiat? I don't understand what is going to drive consumers to use this. Now, I mean, if I was Facebook and I had half of the globe's population directly accessing my website 6.7 times a day, I would consider doing something like this too. So I get what they're after. But from a consumer standpoint, this isn't going to change my life. It's not radical. It's an incremental adjustment. And therefore, I think they're going to have a hard time getting traction. I'm bearish until bullish.
Yeah, I think watching that interplay between the crypto space and Zuckerberg, you say, what's the point? You know, providing yet another way for the Facebook folks to get their hooks into your data. I'm sure there's a lot of interest in that over there. We're going to have to wait and see if this FT report is indeed correct. You know, they're citing a lot of unnamed sources, so you never know how reliable that is. But FT usually a pretty good outlet out there. So we'll keep an eye on this and all the other developments going on in the world of crypto. Unfortunately, that music means we come to the end of this journey through the world of all things crypto. What a hot week it's been. Bitcoin bouncing all over the place. Vol, the SKEW, the action bouncing all over the place. If you guys weren't paying attention to Bitcoin and the Bitcoin options before, you certainly are now. Glad to see so many new air holes joining us here on the old program these days. Still kind of the only game in town when it comes to talking about all things crypto derivatives out there. So keep tuning in. If you like what you hear, recommend it out there to your friends. If you just listen to this program, you're missing out on the whole rest of the network. We're hitting you pretty much twice a day, every day out there. So check out the rest of the programming. Wherever you find this program, listeners, make sure you're subscribing to the full network to get the whole kit and caboodle. A lot of you are new to the options space. So a program like Options Bootcamp, Options Playbook Radio, good starting points for you to learn about some of these terms we're throwing around here on the show today, like SKEW and volatility, all those other fun things, and a whole bunch more. Keep those questions coming too. We do love to hear from you guys. And before we go, Eric, if our listeners are intrigued, maybe they want to learn more about VELLUM Capital, maybe they want to hit up you guys for some money management expertise, where should they go? What should they do?
Sure. Our website is vellum.capital or vellumfunds.com. And if they want to just drop us an email, info@vellum.capital, CAPITAL, and we'll respond to you right away.
There you go. Check them out over there at VELLUM Capital. On behalf of Eric and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions. Everything you guys do, you guys have loved this program for coming up on 2 years. In January will be 2 years, which is crazy. To me, this is still the newcomer, the new kid on the block here on the network. But we love it. You guys love it. Remember, stay tuned throughout the rest of the week. Couple of shows hitting you pretty much every day throughout the week. And we'll be back again next Monday for another episode of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.